Good morning. You're watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading day. It's the last trading day of the week, guys. Let's go straight to our top story. BSP Governor Ben Diokno now expects economic recovery to take place between the last quarter of 2022 and early 2023. Diokno says the central bank will be keeping an accommodative monetary policy stance, meaning interest rates will remain low until the economy fully recovers to pre-pandemic levels. Last month, the Monetary Board kept the benchmark interest rate at a record low of 2%, citing the need to support the early stages of recovery. Diokno says the BSP will strive to maintain an accommodative policy to help boost demand and market confidence. The board will meet on September 23rd for its next policy meeting. Now, mayors and business groups are now strengthening calls for more mobility for fully vaccinated individuals. Their battle cry: the lockdowns are not working. Mobile journalist Pamela Vasquez gives us the front seat to this story.
Thank you. The restaurant group says many of its members have closed shop for good in the last 18 months and losses are piling up.
Losses nationally is about 1 billion a week. That's including informal sector. We're talking about food courts, fast foods, and the like.
The administration's economic team has been pushing for looser restrictions, at least for vaccinated people. But although Finance Secretary Sunny Dominguez is part of the IATF, he says he's sometimes a lonely voice in the group.
Sometimes in the IATF, we are a lonely voice of trying to convince people that the idea of lockdowns, entire community.
He said the IATF deferred the shift to granular lockdowns to September 15 because they needed time to iron out the rule. NEDA sounded the alarm over the effect of the prolonged lockdown on children, saying 18 months of no face-to-face classes will cost them for life.
We have an estimate that productivity loss over the next 40 years is going to be around 11 trillion pesos for the 1 year where we had no face-to-face schooling.
Under granular lockdown, the local government units will be in charge of restricting movement where there are high cases of COVID, whether it be within the building, street, or barangay. The strategy will be piloted in the National Capital Region before being rolled elsewhere. I'm Pamela Vasquez and we are One News.
Meanwhile, here are the other headlines we're keeping our eyes on. The country's factory output expanded for the fourth straight month in July. You can see that on your screens here. Preliminary results from the Philippine Statistics Authority showed the volume of production index surging over 500% year on year. That is even higher than the revised 459% growth in June and a reversal of the 72% contraction a year earlier. Meanwhile, the value of production index soared by an annual 528%. This was faster than the 444% expansion in June and a turnaround from the 74% decline in July of 2020. Year to date, expansion in factory output averaged 43.6%. The PSA noted expansion in 14 out of 22 industry divisions in July, led by coke and refined petroleum. Now, this from the Philippine Star: the continued closure of schools in the Philippines will not only have long-term scars on students, but will also cost the economy trillions of pesos over the next 4 decades. During the second part of the Senate Committee on Finance hearing yesterday, NEDA Secretary Carl Chua estimated that losses would hover around 11 trillion pesos over 40 years. Chua said that the lack of face-to-face classes will limit the learning ability of students, and that has a permanent effect over their lifespan while they are in the labor force. This data has already been handed to the IATF to guide them on the necessary steps in terms of education. Recall that schools were forced to shut down globally due to the pandemic last year, but many countries have already started reopening them. Unfortunately, the Philippines, alongside Venezuela, are the only 2 countries in the world where schools remain shut. Okay, guys, it's the last trading day of the week. Let's kick off with a few economic indicators here, kicking off with foreign direct investments. First of all, we do have two different reports, one from the Philippine Statistics Authority in terms of foreign investment commitment. That has bounced back in the second quarter, ending five straight quarters of a decline and the highest commitments in at least two quarters. Now, preliminary data from the PSA showed that these approved foreign investments climbed by 45.5% to just over 22.5 billion pesos in the second quarter. That compares to 15.46 billion pesos, which were pledged around a year ago. Now, when you bring in the April to June growth, that was a reversal from the first 3 months of the year. We saw actually those foreign investment pledges declining by close to 33%. And even last year in 2020, the second quarter saw quite a sharp decline of 69% in foreign direct investment pledges. And this is from the Bangko Sentral. The actual foreign direct investments we saw in the month of June was up by 60.4% year on year to $833 million. Now let's open the markets together, shall we? You can see us down a touch by 0.16%. Nevertheless, still above those 6,900 levels. Nevertheless, staying quite strong here. Let's take a look at our sectors and how that is really just a mixed bag. You've got properties leading the charge downwards, down by 0.5%, together with holding firms and financials. You still have services fighting strongly here this morning. Let's take a look at our leaders and our laggards here as we are 9 minutes into the trading day. Converge, the biggest gainer here this morning, up by 0.9%, together with Pure Gold and LTG. But on the downside, you've got Aboitiz Equity Ventures that is down by 1.3%, bringing down that holdings counter. Now, all eyes, however, are on PAL this morning. Of course, the stock has been suspended since at least mid-June, but it's all systems go for their restructuring. They won a U.S. court approval to borrow money from their controlling shareholders to start the bankruptcy case in the US. That's around $20 million to start this bankruptcy. Recall that there is a package of $505 million, and that is being provided by an indirect equity owner called Buona Sorte Holdings, as well as PAL Holdings, which is PAL's parent company. Now, under this restructuring deal with the creditors, the company aims to exit the bankruptcy in about 180 days. Meanwhile, you've also got the government weighing in here, saying this from Secretary Dominguez, who actually, incidentally, was a former PAL president himself. He said the government would only participate in the fundraising of PAL if all goes well with the corporate restructuring. He said that they need to make sure that PAL can first pay whatever amount that the state-run banks such as Land Bank and BBP would be lending to the company. Speaking of those banks here, you do have the top five creditors here reacting to whether they have the money to basically bail out PAL. They are saying that they have loss buffers and that can cover all of PAL's woes. You've got, first of all, BDO, who has the top exposure here. They said that they are adequately covered when it comes to that. They have around 80 point, this is the second largest creditor, by the way, $80.42 million of secured claims from PAL. Of course, the total secured claims of PAL from their creditors is around $866 million. This is according to Kurtzman Carson Consultants. Of course, PNB is the largest creditor here. So far, they have not commented on this figure, but the consultants are saying that that's around $156 million that they need to secure back from PAL. China Bank, meanwhile, claims around $54.83 million from PAL. They said they can very well absorb that. Now, let's take a look at another very important sector here, that is the telco space. This, as Dito Telecom says, that they are setting the launch of home broadband in the fourth quarter. So very interestingly, I recall that we had Adele Tamano of Dito Telecom already hinting on that a few weeks ago, and now it's official. So they're hoping to launch a 5G home broadband service in the fourth quarter. And they will be using this to provide fixed wireless connectivity to the home. So it's quite interesting. It's fixed, but it's wireless. So that is an alternative to the fiber to home service that we are seeing, of course, from the other telco players. He says that this is the fastest way of providing the fixed broadband because hindi na kailangan kumuha ng right of way for that fiber optic cable. So it's going to be wireless and yet fixed. Dito Telecom here trading at 8 pesos and 90 centavos. That is up by 0.9%. And finally, we do have one to watch out for here, and that is Mega World. This, as the REIT or M-REIT, has now set their IPO price at 16 pesos and 10 centavos per share. Recall that they've been going throughout their cornerstone foreign investors. Until yesterday, and finally they're now able to offer these shares to the public for a listing tentatively on September 14. So they're looking at 16 pesos and 10 centavos per share. That is going to be 844.3 million shares with an over allotment option of 105.5 million shares. Now recall that their target was originally around 22 pesos per share for this M-REIT. Thus, this is quite a discount, which will now be offered at 16 pesos and 10 centavos. Its parent company, Mega World, is trading at 2 pesos and 99 centavos. That is a bump up of 0.3%. And that's a first look into the business day. Today is September 10, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.